Welcome to this session. My name is Sara Buraik. I am a senior analyst and journalist at Bahrain International News Directorate at the Ministry of Information Affairs here in the Kingdom of Bahrain. The topic we are going to be addressing while I host this panel is digital finance and financial inclusion. The members of today's panel that are joining me are Mr. Mohamed Wassim Khayyata, who is the CEO of Maryah Community Bank, the first digital bank in the UAE. Also joining us is Mr. Sajeev Nair, who is the Senior Executive Officer for the Zurich International Life Company, who also happens to be the sponsor of this panel and session right now. Next, we have Mr. Mohamed Murad, who is a financial planning specialist at AHR Private Wealth. Also joining us from the benefit company is Mr. Hamad Salmin, who is an assistant manager for business development and services at the benefit company. Thank you for being with us today. First off, let me talk a little bit about what we're going to be addressing. So the session is going to look into how fintech tools around the world and our region are offering a fresh approach to managing a person's money or wealth, so to say, helping people to make digital payments, to digitalize their banking transactions, their savings, their applications to loans and stuff like that, and basically monitoring and analyzing their own spending patterns, so to say. There's a small change of plans just for you to know why I am here. Ms. Nuha Shakir, who is the founder and secretary general of the Egyptian Fintech Association, vice president of the Africa Fintech Network, has regrettably fallen very ill today. We wish her to recover very soon. And so I had to step in, and that's why we had a little bit of a delay. Also, I'd like to mention Mr. Saeed Hijazi, who is the CEO of Wali, also had to attend to an unexpected meeting with the central bank in Saudi. So we have or are honored to be joined by Mr. Mohamed Murad, who was able to join us very last minute. Thank you all for being here. As the experts on fintech, I first want to talk a little bit about how fintech is basically innovating our banking processes over the past 10 years. To be specific, actually, fintech, people keep hearing it, but maybe very seldomly know what it refers to. So in terms in referring to softwares and mobile applications that help us in creating and improving the traditional physical financial agreements that people have to go to banks or ask for loans and so on. Fintech is actually the innovative way of dealing with these kind of business transactions. First up, what progress is fintech making specifically in our Arab world to achieve financial inclusion in digital life? I'm going to face this question to Mr. Khayyata because he represents the UAE's first digital bank or the banking application, as well as from the point of view of Mr. Khayyata, who has been heading this institution and seeing in depth how it affects the region internally.
Thank you very much, respected panel. It's an honor to be part of this great conference, which is needed in our area, actually. It's the household savings, and talking about fintech. Today, as you know, dependence on mobile is increasing day after day. So anything around the mobile is what every one of us wants. So I always imagine us being each one in his or her own island, communicating with the world by WhatsApp, doing banking transactions and doing what's required. Interestingly, the mobile is being the way we live our life. We take care of our financial wellness, our healthy habits. We do appointments, we do business. So fintech has been the base of being up to date in terms of meeting your goals, having your financial literacy which is a key component in deciding how much you have like disposable income to achieve your long-term savings. So with fintech, for example, in Maryah Bank, we were able to use artificial intelligence to meet our first objective using technology, which is being able to know one's expenses, whether it's an individual or a family. So we have a family account where we have a pot, a digital pot, and the husband and the wife can contribute. You can open miners account with a product called Ayalna. So with that, for example, you will be able to know which kid could spend how much. So, you know, we all have kids at home, and we need to get them financially literate in terms of knowing what needs to be spent and what not need to be spent. Myself, I have two kids. One of them loves to spend money, the other one to save money. So you need to tell them what is the right way. And without fintech, without monitoring and knowing each one's behavior using technology, it will be difficult to adjust behavior and accordingly increase our literacy. Earlier, I was hearing that financial literacy in our world is about 12.6% versus 2025 worldwide. So we are behind. I think fintech plays a lot of role not only in financial literacy but also in planning our day-to-day life.
Absolutely. And that's looking at it from that perspective, I'm going to defer to Mr. Hamad Salmin, who represents one of the digital solutions that were introduced here locally in Bahrain, but really are shown in different parts of the region. So Benefit is one of these fintech solutions introduced. What can you tell us about the use of a fintech, specifically Benefit, in the Arab world or in our region to achieve this kind of financial inclusion?
Thank you, Sara. Thank you, Fintech Robos, for having me here. Very honored to speak with the honorable guests. I mean, Benefit is known with its very well flagship product, Benefit Pay, which we launched back in 2017. And we have seen a tremendous growth in terms of the user base or in terms of the actual transactions that happens over this platform. And the pandemic has helped a lot in that. Good that the pandemic has some positive or advantages to us. And solutions like those are very well needed, like Mr. Mohamed said, because they do help in increasing the financial literacy and you know, those millennials and the people are coming to use those are using those apps more than watching a tutorial video or having some sort of an education at school. So the fact that you have accessibility to those individuals through the technology, of which they trust more than any other legacy system, that helps a lot in the financial inclusion. And the Benefit Company have done a great job in terms of implementing such solutions. We have been quite a leader in the region and providing the infrastructure for the region, for Bahrain, in terms of instant payments, for instance, whereby transactions could occur in a matter of seconds. With the easy user experience by entering only a mobile number. And we have been approached by many, I would say, countries that want to implement such at the national level. So it's a great that we see a technology advanced in Bahrain, and we see other interests from neighboring countries that we see as a role model. Let's say as a Dubai, where it is much advanced than Bahrain in terms of other aspects, but in terms of financial sector, we are very well established, and people look into Bahrain as a role model in terms of the financial sector.
Absolutely. When we talk about fintech, people think about banks, but the reality is fintech actually spreads into other financial transactions. And this is where I'd like to ask Mr. Sajeev Nair to give us more about it, especially that we are talking about the insurance field, which deals now with a lot of fintech technologies in order to serve their clients and customers. Khayyata.
Sure. Thank you, Sarah. So just as a quick introduction, right? So Zurich this is 150th year in operation. We're headquartered in Switzerland, and I had a unit called Zurich Workplace Solutions. So we are the administrator for the DUSE program, which is the DIFC Employee Workplace Savings Scheme. And it is first of a kind scheme in the region where we have moved from what is traditionally the end of service gratuity model to a fully funded, professionally managed end of service benefit schemes, which is a defined contribution scheme. And for me, this whole journey over the last couple of years has been a great demonstration of, I would say, three things. One is technology and fintech adoption, and all of that and I'll talk about that. But more importantly, it's also a big journey in how you manage change and create awareness and education, because technology and fintech and all of the aspects we can bring in from a technology perspective is one side of the coin. The other side of the coin is very much on how you actually implement it and make it happen. So the journey started about 2 years ago, February 2020, and we had to enroll over 1,100 companies in a short span of time. And in the last 7 days leading up to the deadline, we had to enroll close to 11,000 members and 1,100 plus companies in a span of 7 days. And that wouldn't have been possible without the adoption of an auto-enrollment solution and technology, right? Today, the plan has over 1,450 companies, 22,000 active members. And I always come back to this one major metric. This is the magic metric I would always say, right? So we talk about financial inclusion, we talk about financial well-being, but what is the metric? What is the magic metric we measure against? And for me, it's always about the whole scheme was set up to ensure that people get paid out when they leave their service. And over the last 2 years, we've had 4,200 people who've left their current employment, and we've paid out over 100 million dirhams in that period. So that's a substantial number. That's kind of goes back to saying, you know, that meets the core objective of what the scheme was set up to do. The second point is then about awareness. So I talked about all of these things that we talked about wouldn't have been possible without having technology as the backbone and the foundation of it. But more importantly, it is very much about how you manage that change, how you introduce that change. It's a substantial employment law change. You have to educate 20,000 plus employees, 1,400 plus employers through what is a substantial legal change in how they had operated before to now. And just if I look at 2021, we had conducted 250 plus employee and employer sessions, educating people on the new laws, how to adopt it. Of course, we have mobile applications, online ways of interacting. All of those are there. But in my mind, that's kind of foundational. Unless you go out there and you know, are very proactive in educating members, its adoption rates can be quite low, right? So that has been a critical success factor in terms of how the engagement, outward engagement has actually driven inward engagement as well. So if I look at engagement rates of people opening emails and stuff like that, we see close to 1 in 2 people actually open it, as opposed to similar schemes. You would typically have 20% of the people actually responding or clicking on communication that's sent out. We probably have about 48% of employees who are actually interacting with the system on a regular basis. And last but not the least, I would say customer feedback, right? So people have, 82% of the employers that we surveyed in December, they said they felt that the whole scheme had made either a positive or a very positive impact on how their employees have control over their end of service benefits, visibility, and assurance of the whole setup. So to summarize, it's very much technology is one part of it, but we have to very much be aware that making it happen requires a lot of change management effort.
Absolutely, and management would be our key word when we talk about the end goals for dealing with the different transactions, bank financial transactions, having insurance, that kind of stuff. It's always for a set goal, and most of the people that are listening to us have the goal of managing their own wealth and having these targets fulfilled. And this is where I'm going to talk to Mr. Mohamed Murad, what can you tell us about how the introduction of fintech came to to heighten basically the work of wealth management companies in the advisory factor and make it easier for people to make those difficult decisions?
First of all, good afternoon to you and the panel. It is a great pleasure to be here with you this evening. I hope you can hear me well. This is a great discussion, and the question that you have directed my way, it is very large, and in the same moment, I'll try my best to tailor it to exactly what I think we should be thinking around, right? If we think around 5 pillars into the solution, one of them is the awareness that was started by Mr. Mohamed Khayyata and then retransferred by Mr. Sajeev. Then if we start dwelling a little bit more into the technology part of it, first you have the interface, and it all comes under the umbrella of excellency center. Let's say whenever you're providing solutions to your client, because now in every governance the client is, and as it should be, in the center of every solution we're bringing out, right? So when we're speaking about excellency center, it's the interface that we're having between us and the client. So whatever is that solution being provided from a human being like me or from a robot advised on the other side, it should be about the interface. So when we're speaking about interfaces, the way in, so when we're speaking on the way in or the onboarding processes, you're speaking about the KYCs, the suitability letters, the blah, 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 all these documentations to protect and provide the proper assessment of the client from his needs, gaps analysis, investable capital that he has, his benchmark and his objectives, and most importantly, his stochastic risk profile, which we could do right now, right? On the other side, imagine you have a solution where the client can receive a monthly aggregate report fulfilling all his wealth details, from the pensions contributions to his own wealth management solutions, to his own bank account, to his own, let's say, cryptocurrencies or crypto assets that he's owning or properties. And this is the other interface that he wished to have on the other side. Now, in between, there's a lot of calculation, or let's say calculated analysis, that should be happening in the background, where are we providing the best solution to this client to meet his benchmark, his risk profile and everything, and of course his appetite and his let's say causes in life. Right now, if we're speaking about trends in the marketplace like the ESG investments and stuff, so how do you design a profile to meet that? Now, these are the pillars. The second pillar that works in the background. The first pillar is the interface. And now when you're starting to speaking about the execution levels, um, how do you start designing a portfolio to be with the cycle, against the cycle? And this is a little bit more, a little bit advanced to understand what's happening in the marketplace. What are the leading indicator, lagging indicators? What goes in with what? Which sector is right time for investment? And how do you balance or rebalance, regardless whether we're looking for long-term investment or a short-term investment? These questions all should be asked in the algorithm when we're designing. And this is basically what we used to do as human beings. Now, these solutions, when you start applying automation, where do you take it to, right? Now, the mass market always can be sold on those solutions, and it should be managed on those solutions. Now, for when you start looking into the market into, let's say, 2 or 3 categories, or maybe 4 categories, this is when we're speaking, let's say, about the non-experienced robot advice, and the design solution would become extremely helpful for them. And then when you start looking for a little bit more into the middle of the pyramid case, you should be looking for a little bit more of a hybrid advice between a human being and the robot at the same time. And then when you're looking at the top of the pyramid, this is when you're looking a little bit more with experienced or sophisticated investors. This is where a human being should be on the contact. Now, if you put all of this through an application that the client is being able to access that service through a mobile application, for whatever his question is with his personal advice, whether it's a robot or as a human being, he can have access to a chat or a direct messaging or a direct video collection, and then it becomes a more suitable solution for him because he's feeling the human touch and as well the mechanic touch from the robot, and he would feel homely and more supported. And this is what will bring him, as a modern investor today, will bring him more the, let's say, the loyalty and the warmth of a solution being provided to him. And of course, it comes with it all the transparency situation that he would be requiring, and that's his right. And this is what we're seeing. This is the drift that is happening in the marketplace, and this is what we're trying to build.
Absolutely. Thank you for elaborating on that. And since we are going into fintech, let's take it in phases or like in fields, as you have mentioned, Mr. Murad. So I want to first address the digital banking sector. When we talked about Maryah Community Bank, specifically, Mr. Khayyata, a very important vision and mission was set for your bank. You did not only aim to address individuals, but as well SMEs and basically different institutions that are either starting up or that have already long-term transactions with different banks, but wanted to simplify it or have everything within their hands grasp. What can you tell us about the building of the bank, of a community bank such as Maryah, in basically answering the demand of the community?
Okay, from the name of our bank, it's community. So we're the first community-based bank, and we say community is to make sure that we service it. And as part of our vision and mission for financial inclusion, technology was the choice to ensure that we have the low-cost based that we need in order to service the unbankable universe. So as you know, for example, if you take any economy, there are the lower segment of people who would need no minimum balance and no annual fees. However, they need access to financial services, be it a debit card, a credit card, or any type of transaction. So we have in the Maryah Bank, as a community bank, we have three main visions or three main objectives. The first one is to make sure that we help individuals to know their financial means and know their financial obligations and plan their expenditure accordingly. So if I'm a person, I have X income, I have a Y goal when I retire at X. So how much do I need to keep aside in order for Mohamed Murad's robo-advisors to invest for my long term, given the risk profile I need? So this is the basic brick that we need in our Arab world to know. So this is the first objective. The second objective is for companies, especially as SMEs. As you know, the private sector in our world, the Arab world, has played a very humble role compared to the private sector in the USA. We look up into the USA, we look into Europe, and why they have been able to perform in a better fashion is because the information available to regulators are really ready, given the fintech, given the technology and the consolidation of information, which will enable regulators to make service providers like ourselves available to give it to the economy. In putting this into context, so what we do in Al Maryah Bank today, we're partners with the government of Abu Dhabi, and we're doing a consolidated technology platform to play the important role of incubator, accelerator, and putting applications, fundraising from crowd or from banks in a bankable uniform. So we have made automated processes to get businesses to get finance through digitization of assets for supply chain finance, as well as getting growth factors through providing services like factoring. These platforms are important for the economy to focus its drive to support businesses to make them more successful and accordingly create more jobs. I've heard earlier in the session that governments have the biggest responsibility in job creation, and that is not possible without using community technology-based banks, maybe, and also coordinating with institutions like growth fund managers or insurance that would consolidate this information and provide long-term pension plans.
Absolutely. I mean, one of the main aspects that you actually addressed was the monitoring tool that Fintech provides to the end user. So this is actually a question that was also set from the audience to you, Mr. Khayyata. So if I am an SME owner and want to place my company's payroll eventually and salaries via Maryah Bank, how easy or difficult would it be to do that via the application or the bank itself through Fintech portals?
Excellent. So we have three-stage process. So the first one is the onboarding. So we make sure, first of all, we know the SME or the company, and we do not say no. There's no. So if there's a criteria, which is basically like audited financials, we can see their financial statements, we can always see that there's always a surplus, revenues are more than the cost. Once that is set, then the company gets onboarded, and we have three types of offerings. One type is to do the payroll services, and we have a product called Ziyada, which is the overdraft facility. We have Raha, which is the consolidation of debt settlement, and we have other, of course, long-term funding with easy payment plans. And together with it, we're tying up with insurance companies like Zurich to make sure that we provide a tailor-made pension plans for retail employees or SME employees and their families. So that's the second stage. The third stage, we get into a process where we use our technology to enhance the revenues. So that gets into two legs. The first one, if it's a retail shop, so we need to onboard them on our e-commerce to support them against the big giants like Amazon and the Noon that we have here. As you know, these fintech-based or e-commerce-based companies are taking over market share, and we need to support the small businesses that have invested in bricks and mortar shops, paying rents, paying fees to the government, income tax, etc. So that's one leg where we help our SMEs. And the second is to get them financial tools like asset and liability management, inventory checking, digitization of assets. And these are important to make them bankable, because not all SMEs are aware of what banks need and how I can have a file that banks can look into and buy the risk. So these are the two ways of enhancing, and that we see it. We always here in UAE have a yes or a no. So if you're an SME or you start up, it's very easy to have a no. And there's no community-based bank looking into such SMEs and support them the way they need to grow and further develop themselves and develop their role in the economy.
Absolutely wonderful. Mr. Sajeev, when we talk about fintech and the monitoring tools that are provided through the different banks in the GCC and the MENA region, insurance companies and insurance providers such as Zurich International also have a hand in setting these standards that have to be there from the banking and from institutions such as the CBB here in Bahrain and different monitoring bodies. So, Mr. Sajeev, what can you tell us about how these standards are set in order to keep clients of insurance companies such as yourself and eventually future clients safe, and have them be aware of what they can be looking at, what their rights are, what they can apply for, and so on?
So a few things that go into play, right? So for one, it clearly depends on how it's important to understand how we go to market, right? So there are multiple distribution channels that we use. We have our own direct distribution channels. We go through independent financial advisors. We have our bank insurance partners who we go through them. But underlying all of this, First and foremost, of course, it is making sure that you are meeting all regulations and compliance requirements. That's not just in the region that we operate, but we also have a set of very stringent standards that are globally defined. So there's a global framework that allows us or clearly sets out boundaries of what is possible and what is not. And then overlaid on top of that is any local legal, regulatory, and compliance requirements. And these are then encoded into the product. And we are then making sure that the customer is aware of what the do's and don'ts are. And end of the day, it's always about making sure. So if we've been in business for 150 years, there's obviously something we are doing right in terms of managing risk. So it is, I mean, suffice to say that it very much is dependent and based on, the whole ethos is based on a very strong risk and compliance framework globally that is then added and bolstered using local legal and regulatory compliance requirements. And then we have a lot of focus on making sure that we're educating our customers, and there is a lot of transparency in terms of how that is communicated at the point of sale, at the time when the sales are being made to the customers. But also we're very transparent about benefits paid. So I just gave you some examples in my previous, in response to your previous question as to how much money was paid out in withdrawals. We do exactly the same in terms of benefits paid. So every year we publish a benefits paid report that basically clearly outlines what percentage of claims we've paid and so on. So transparency at point of sale, but also throughout the life cycle is quite important.
Yes. Also, another thing, adding to the topic that you just mentioned, when you look at the services that are provided by insurance companies such as Zurich International Life, we also see the diversity of services provided. And specifically in the Middle East, you guys have done a tremendous job in speaking up for services such as life insurances, other services that have to do with the management of existing accounts or stuff like that. What can you tell us about how people are basically addressing these? Are they more interested now in these services because they're part of fintech? Do they know more about it because there is easier access? What can you tell us about that?
So what we are observing across, I mean, traditionally, it is broadly the business, if you look at it, it is about protection and savings, right? So that's roughly how you would classify this. But what we are observing, and this is not just a trend in the GCC, but globally, what we're observing is there's a much bigger, so obviously savings and protection are foundational. They're very, very important. And when we do surveys with various people, the awareness is increasing, but it's not there yet, right? So that's so how many people, if we ask around the panel here, how many people do really know what kind of life insurance coverage is available as a part of their employment contract? I'm not 100% sure that everybody would know, right? So that's that's the first part, right? So savings and protection, foundational, that's very, very important. But what we're also seeing is there's a much bigger focus now on wellness. Now that includes physical wellness, digital wellness, right, and mental wellness. So these are increasing demands that are coming in, and these are the increasing focus coming on these aspects, and people would like personalization. And this is very much a fintech topic to say, okay, all of these services are great, but you need to personalize it to my stage of life, my stage in my career journey. And so that's kind of the core part of it. So protection, savings, foundational, but we are clearly seeing a lot more preventive aspects coming in, and that has to be personalized. That's how I would see the trends coming.
Absolutely. Let's talk a little bit more about the different kind of applications of fintech within the digital market. I'm going to talk to Mr. Mohamed Salmin. Benefit Company specifically has introduced so many different ways to interact and do financial transactions through the application and really lessen the time consumed in doing these transactions. This was only possible possible with certain cooperations between benefit company and different organizations within the Kingdom of Bahrain. Just to mention off the top of my head, as somebody living in Bahrain, we have the Sadim fuel stations. We also have e-checks that can be made through the application. And these really have eased the way people can use their money and have an eye on it while saving, putting this for saving or dedicating certain amounts for different objectives. How is that possible? How did you come up with these services in the application itself?
Thank you, Sarah. I mean, by benefit company, we are originally an infrastructure company. So we do build the infrastructure for the financial sector in Bahrain. We are very well known as the technical arm of the Central Bank of Bahrain. So what we saw with infrastructure being built is that banks, or let's traditional banks, are going very slow in terms of adoption and in terms of using this infrastructure and availing it on their digital services or digital platforms, be it internet or mobile banking. So we have launched our first customer front-facing app, which is Benefit Pay app, that translates those kind of infrastructure to a front-facing, very user-friendly, and takes into consideration the prospects of optimal user experience, of which we were making it very easier to be used and adopted. For instance, the electronic fund transfer system, be it as fund transfers or fawatir bill payments. Those were available in Bahrain 3 years back prior introducing Benefit Pay application. But because we added certain elements that are very user-friendly and takes into consideration user experience, like for instance, aliasing the IBAN with the mobile number, that made the adoption very easier. And of course, we could not produce such without our support of the central bank, being the operator of such infrastructural services, plus in addition to partnering with other players. You mentioned Sadim as a fuel partner, whereby we enabled cashless payments on fuel stations. Before that solution, it was predominantly cash-based and even no point of sale being physical point of sale being there. Now there are other also partnerships that we are availing, and in fact the benefit is staying in the middle, not to compete with others, but to establish certain marketplaces whereby fintechs or other companies can come on board. For instance, one of the marketplaces that we have recently launched is international transfers. So we saw that the demand for international transfers for people using Benefit Pay in Bahrain is quite high, and people wanted it to be on this app itself. So instead of building our own network or partnering with an external network, we opened a marketplace whereby those current local exchange houses, being Bahrain Finance, Nunu Exchange House, Lulu Exchange House, can become on board into Benefit Pay app and offer their services to them. Because in the end, we have included all 600,000 active users monthly in Bahrain, which is a very significant number. And we can offer our partners the solution to access those services. So it's a matter of using a user-friendly approach on top of the solid infrastructure that we have built, plus partnering with other players in the society, be it fintechs or even traditional, let's say, companies, and onboarding them and do a very well win-win solution to serve the end user.
Absolutely. When we look at the different digital propositions that we talked about, I want to ask Mr. Mohamed Murad, from your point of view, generally, compared to the incumbent big institutions, terms of safety and sustainability, programs like this or digital propositions like this have to be sustainable for a longer time. And our different members mentioned important factors like the awareness factor of the people using these applications or the fintech in the end, whether they are individuals or they're the actual companies. But from your point of view, how do these digital propositions generally compare to the incumbent big institutions' terms of safety and sustainability?
If I may, Sarah, can you please repeat the question? For some time I had a glitch and I literally
It's
could not
okay.
hear what the question
No
was.
problem at all. So when we talk to our other members, they mentioned the different digital propositions that are being
Yeah, we
applied.
spoke about the sustainability, but when you arrived to the end of the question, I could not hear what was it.
I want to know from you, how do these digital propositions compare to the big institutions in terms of the safety and sustainability, the digital
To,
solutions?
to big institutions like what? Like
Like
who?
the physical banks that are accessible or that are available right now, for instance, how are
Okay.
the digital solutions going to diversify and ease the application on individuals, whether they are companies or individuals?
Okay. They are definitely taking some serious market share from them unless they catch up. And this is the bottom line solution. Now, if I step back a little bit backward and just put some meat into this, look, there has been so many changes. First of all, today the standard client in the marketplace is a user of technology and information is available for him all over the world. He can see solutions happening in Europe, in the US, in the Middle East, just within seconds, within a couple of clicks of his mobile, right? So ignorance in this domain or taking advantage of that space is no longer acceptable. Charging high fees on services on solutions that should be on split fees is no longer acceptable. People in a bank or even people in the private space that were giving advice or giving solutions without the real knowledge and backup behind it is no longer acceptable. Today, if someone does something very bad, I can give you a personal story. Example, I had a story with a bank. My wife's credit card has been used without authorizations. We tried to speak with the bank for so many times. They really deducted the money and they could not pay it back. They did not, they refused to pay it back. Until one day, just we went on social media and left a comment on their page on social media. And then within 3 days, what a fight took us 3 months to get the money back, it was sold within 3 days. So today, let's say compliance is becoming more international. People measuring up to certain standard and managing client expectations is no longer and is no longer hidden behind doors. Let's say when we're speaking about fees, is no longer a commission, is really a fees that is well observed, understood by the client. So these all these changes are on one side. On the other change now. Um, with the blockchain technology and the DeFi and wherever exchange that we're speaking of, a client can jump into through his mobile, put his money in any assets that he wishes just by couple of clicks. So if a bank or a large institute does not adapt to match up with the information gap that was available, so his advisor or his what they call them in the classical industry, the relationship manager or wherever you want, does not really provide value. So the bank, all of it does not provide value anymore. If a bank is charging fees or whatever, plus he's not giving the real benefits like what the clients could get benefits today by staking on a crypto platform, earning 10-12% per year, while on the other solutions the bank is giving him 1.5% on interest rate. This is another challenge for the bank to keep up with this changing dynamics in the marketplace. So the first thing is the knowledge that transparency is changing. Now the returns that those clients are expecting is also another challenge that the banks are going to be talking about, and they have to talk about it. Otherwise, all this money pot that was bank stacked in the normal banking system before, it's gonna be changing pods, changing hands. Like I want to quote here Henry Ford quote that he says, if people really knows how the bank system works and the monetary systems works, tomorrow we will have a revolution. And that's true. Today we're not speaking with people like in the 70s where only a couple of few people could place a trade on a stock order, place a paper, send it by fax for a couple of days to get executed. Today, anybody with a mobile phone, smartphones can buy shares in Tesla just with a click of a button, right? And it's all about knowing what to do, how to do it, and with whom are you going to do it. And this is a big challenge that banks are going to have and large institutes are going to have unless they start becoming lean and they become closer to the expectations, the changing expectations that the clients are having, the youngsters are having.
Absolutely, absolutely. Actually, on that point itself, Mr. Al-Khayyata, one of the things that Maryah actually does give for its clients is the opportunities to sign up with different IPOs. And I think it's very important to mention, not just do you give them the opportunities to sign up for the IPOs, but you explain it to them and you make the awareness available to them what it means to be a shareholder and to be able to do this in the long run. So what can you tell us, what is your expectation in terms of the market stakes that the digital banks are likely to take from traditional banking over the coming 5 years when they are already providing services such as IPOs at a click of a button from the phone?
Excellent question. Actually, there are 3 degrees of how classical banks may lose market share towards fintech. So I'll start with the easiest one, which is buy now, pay later. As you know, now today, a classical bank cannot understand what's buy now, pay later. And then these are simply payment gateways that are connected to credit score models, whereby if you buy something, you can buy it in 12 zero interest installments. So I'm talking to, if any bank is listening to me and say, how do you make money? And that's the trick. And this is what fintechs provide. So that's the first level. The second level of how big banks will lose are their organizational structure. So if you look at our organizational structure, it's 100% different. The DNA is different. So we are ESG compliant, environmental, social governance. So what does that mean? A classical example of that is retail, for example. A group retail head would have his product managers, would have his credit team, would have everything under his organizational structure. We operate as a product in Apple. So we have the iMac product manager, and we have the iPhone product manager. They're sitting outside the retail distribution. So that on its own will make things quicker, faster, and more social and governance compliant. So that's the second degree. The third degree, I'm going to talk about the fintech-based digital assets and cryptos. Today, if I want to deal something, if I'm going to send something to Sajeev, I don't need to have a bank account. I can send him money across Binance. Binance, come on, it has been licensed in Bahrain Monetary Authority in UAE. So why do I need a bank to transfer money? Why do I need a bank to buy an asset from Mohamed Murad? If his investment application connects to Binance, that's it. I don't need a bank. I just need to open a wallet and buy crypto. And crypto assets are moving left, right, and center, and regulators need to regulate this access. So these how banks will lose share. And if I just mention some numbers, total value of financial assets worldwide is about $430 trillion. Today, crypto assets stands at 1.7 trillion, rising from 700 2 years ago with a growth rate of 50%. It used to be 20%, it's 30, now it's 50, and this growth is going to accelerate. So digital-based asset fintechs will definitely take over with time, and banks need to change the way they think, the way they take fees from individuals and pay big commissions, big bonuses to the CEOs and to the big board of directors. This has to change. Taking money of the poor people and giving it as, you know, the big financial managers, that's going to change over time.
Absolutely. I mean, when we talk about even the changes in services that are expected in the future, one of the really important factors for you as a digital bank is the user experience. And the user experience part of it is also the awareness that you are providing for the services you're giving out. So one of our audience today is actually asking that specifically. How important is user experience in digital financing? And how do you ensure the success of it, specifically with the communicating with the clients that you
have? It's design, simple. It's just like when you buy a suit. It has to have the material, it has to have the design. So it's a taste. So I'll give you an example. I always have fight with my people. How do you design an easy experience? It's always logic. And here where designers, application designers with logical attributes gets into perspective. So where the competition in fintech goes is how easy is the application and how easy people can follow and understand. So that's what makes one fintech company better than the other. So take, for example, Amazon. And if we take Amazon, you know, how you buy things, you know, they started with very strict regulations to the point of you can return anything back if you don't like it, because they found that, you know, they have stores, I don't know, warehouse, no numbers, but they have a huge amount of returned goods are stored somewhere. That's just for the sake of customer experience. It's just to make people even try. You can buy a t-shirt, you can buy a jacket. If it doesn't fit you, so you can send it back and you get your money back. So fintech has played an important role for that. And there are, I've seen a company in India who are having a digital catalog. So if I want to wear anything, I just put myself, I can even stand in the back and have the jacket and see it, but digitally, to see if the color fits, etc., etc. So these things, fintech is really becoming a very important part of our skills. We all need our moments where we need to communicate with our family or even my boss or something to do. So definitely, the way going forward, we are witnessing a very important role of fintech-based companies and how banks should change their mentality, which will take them a long time. And we will witness day after day. I remembered Square. I don't know if people know Square. So Square, which is called now, they changed their name. They started in 2009 with $50 million. That was Series A fundraising. They was in 5 million. Now the company is about 146 billion. I mean, look at the growth rate. And you know what they offer? They offer a payment solution. It's a point of sale. And they have various checkouts. They have two kinds of checkout. If you're a service, which is a doctor, they call you an appointment. Or if you sell product, they say it's a point of sale. So they provide co-branded cards with merchants. They try to give you ERP-based services. They put payment solution, and they grew in the US bigger than the oldest banks in the USA. So this is one small example of how would fintech take over market share from big banks.
We can't hear you, Sara. I think.
Sara, you're muted.
Okay, sorry. Thank you for that. So, Mr. Hamad Salmin, when we talk about benefit, you have your hands up. So I'm assuming you want to answer about the user experience, and Benefit has had a very long-standing experience in this, and listening even to the clients it has, and adapting that, whether it is in the banking sector or the application itself. So what can you give us on your point of view of that?
I mean, Mohamed Khayyata has done a good job explaining the importance of user experience. I think that just to add on top of that, user experience is no longer something as being considered as an added value. It goes without saying. The apps or the financial fintech products has to be very user-friendly, has to be tailored towards a very optimum user experience. Now, the way that is being done is, first, you need to have a management that understands that this is the way. I'm very happy that Mohamed, being as a CEO on the top of the pyramid, understands and talks that language, because it always starts from the top. The second is the agility in terms of development, because when you listen to the customers, expect a lot of changes, expect a lot of tailoring. Although you might recruit the experts in terms of design and taste, you would see difference in terms of, let's say, different prospects and different type of users. And being at Benefit, having a product that is very well addressed towards all the society, is very difficult that you tailor for a single taste. But here comes the importance of beta testing. Beta testing is a very crucial element. You need every single organization, every single product has to go to the beta phase. You need to listen to your customer. You need to see how the customer interacts with your app. Then you need the agility in terms of rebuilding the app and then releasing the optimum product that is very user-friendly to the customer.
Absolutely. Mr. Sajeev, when we talk about user experience, it also applies from a different point of view. User experience is where also the users, or in the end effect, your clients interact with you and actually tell you what are the services that they need in end effect. So what is your expectations after seeing the market and learning about all of this on the growth of employees saving, especially when it comes to expat employees in the UAE or in the GCC region? What are their expectations, the services that you will provide after listening to them?
Okay, so I completely second the couple of comments that were made before. One is making sure that you're absolutely listening to the user. The UX part of it, the user experience part of it, is quite important. We have a specific dedicated customer testing group, which we constantly utilize to make sure that any new features that we are rolling out is actually tested with the end user community. That's the first thing. The second thing, which I think is also important, is around the fact that you cannot ignore the delivery pipeline part of it. So UX is fine, and as Mr. Salmin said, you cannot ignore the delivery, how your delivery pipeline is set up, how you are actually, are you agile enough to take something to market very quickly. So if I specifically call out examples of what we've done, and if I take our end of service benefits as an example, right? So it's a new setup. The regulations are forming and formulating as we speak, right? So there were new regulations designed around, how much money you can withdraw, voluntary contributions you can withdraw. That's one small example. And we had to roll that out into the market quite quickly. So there are a couple of things. One is going back and having a robust conversation with the regulator to say, look, there are certain things in terms of customer experience. This is how we would recommend we should kind of make sure that, we will meet the regulatory objectives, but this is how we recommend we go about it, and then quickly taking that to the market and rolling it out. Now, in all of this, you need to really have a pulse on your users and understand what is the real need. And how do you do that? You can product telemetry. So what you capture through your digital channels, the product telemetry is only part of it. Okay, and for us, it is what is being provided by product telemetry, but it's also what is being spoken at the contact centers, right? So when people call, the real insight sits in that intersection between what the technology is providing and what our contact center people are listening to. And that's where the real insights lie. And that's what we are trying to tap into.
Yes, but on that same note, especially here in the GCC, we're seeing that there is a growing monument for savings and employee saving schemes in the different countries. So how is technology going to facilitate a really fast rollout of these schemes in the region?
So technology is at the core of it. If we don't have technology, this is not going to gain traction. And it might sound very blunt, but that is the reality and that is a fact of it. Okay, if so for one, end of service benefits is not only about protecting the employees, it is also about attracting talent in the region. Okay, let's not make no mistake. This is not just about protection of employees. This is making sure that this region can attract top-notch talent into the respective countries here. And to do that, you need a robust end of service benefits regime in addition to protection and all of that, right? And to enable that to be rolled out, technology is at the core of it. Auto enrollment is at the core of it. I mean, the mobile app and so on, which we all have. Those are all basics. You don't have it, you can't make it happen, right? So technology is at the core of it, but then again, managing the change, execution is. I mean, I will. We can always have the best technology, but if you're not able to execute, if you're not able to manage and implement that change, I would always caution against two things. Technology, yes, you need it. It's basic. You need to have counterparties who can absolutely manage and introduce that change in a very controlled manner across a large population. And last but not the least, let's not forget, anything we introduce has to be sustainable. Okay, so we always have to ask ourselves, we talk about banks having legacy and legacy systems. What we are developing today runs the risk of being the legacy of tomorrow. Okay, so anything that is being built has to be sustainable commercially, technologically, financially. We have all the ingredients in place. We're talking the right things, small squads and all of that. But sustainability of the business model is core to all of this.
Absolutely. Like any other sector, the fintech sector as well faces certain challenges. And the question is to Mr. Al-Khayyata, when we talk about the challenges that you foresee as a community bank that is fully digital, a lot of the society members still have not fully adopted digital financing, although it is generally mainstream when we really take a look at it from today's day and age. So how can we further nudge the society towards wider adoption of the digital finance market? And why are so many people late in basically adopting it, in your opinion?
Okay, that's a good question. Of course, I have to say this, it has been said, pandemic have helped a lot. So this is one. The main challenge are two, basically. The first one is the elderly people who are using their kids, family members to help them open an account. So we saw a lot of customers requiring their family members, which is a compromise of security and confidentiality. This is one challenge we face when it comes to fintech-based bank services. The second challenge is the security, which are against the sabotage, external attackers, cybersecurity issues. Especially when we all now think about cloud-based services and the regulatory requirements and compliance to ensure that consumer protection law is in place, data protection law is in place. So lots of regulators are requiring to have customer data residing in the country itself. So we as a service provider had a challenge to use local big database host services who are not yet up to the level of the service we want to provide. So not all countries have that sophisticated service providers. We had a lot of challenge with them, without naming who are they, because the Central Bank of the UAE requires us to host customer data in the country. So even to the minimum professional communication, we send an email, we get a response after 5 days. I mean, how can we ask them for any help? How can I trust to host my data there? So that's the biggest challenge. It's the ecosystem that would support. And I said the first one, it comes to customers who do not like or do not believe in this mobile, and they are the elderly, and with time is going to change.
Yes, Mr. Mohamed Murad, you have your hand up. You want to comment on something?
Yeah. When we were speaking about the user experience, yeah, I just said a real case scenario, and I just want to show you how important in numbers, right? Just 2 weeks ago, I was trying to create a profile for a $500,000 client. Usually, when I have those type of clients, I work with them on a platform called Interactive Broker because in this region is the cheapest platform, very good execution and everything. Then the client came to me one day. He said, Mohammed, I know you selected this platform for me because of the fees and stuff, but I'm willing to pay extra $10 on every transactions just because I can read the report profile better on a different back platform. I said, I said, look, this is not acceptable for me because the fees are higher, like 10 compared to 1 or zero point 0.1 on a stock exchange, right? He said, yeah, no problem. Don't worry about it. But I can read and I understand the report and I'm willing to pay that difference, and that's on a rotation trade. That's almost $20 per trade, right? So I said, okay, it's your call, but people are willing to pay for a good user experience, and that's a real case scenario that just happened 2 weeks ago, and we're speaking about a large sum of money. So imagine the same thing on a large population. That's all
Absolutely.
what I wanted to support the guys because with an
Yeah.
actual number.
Absolutely.
Thanks.
I'm going to stay with you actually, because
Me.
when we talk about a user experience, one of the users of fintech are also the institutions such as AHR, who manages the wealth of individuals as a third party or a second party or whatever way you want to look at it. So you as a user, a company as a user, using not just the fintech, but also knowing the portfolios of the banks and the wealth institutions through what you work in is also important. So, how does fintech and basically digital platforms help wealth management and financial planning? You've mentioned a little bit about it in the beginning,
Yeah,
but
exactly.
if we look at it in a different perspective, knowing which country has what kind of investment opportunities and so on, how did fintech help you make the decision in this prospect?
Look, right now we're not up to that stage yet. So what I have suggested to you at the beginning is a dream that I would like to be part of, and I'm trying to push forward for it, right? So when we're speaking about client interface, today we don't have a full solution where the client is having everything on board and the full service with his support, with his hybrid advisor, with everything. It doesn't exist. So is there space to develop there? Yes, definitely there is space to develop there. Is someone building it at the moment? I only heard about one company in the UK called Money Info or something like that, and is not yet there to the space where the client really wants. So there's a lot of gap that we can work on to develop. Now, when it comes to the other side, where how to select the funds, how to select the solutions, how to select, right now it's yet still left to the best guess in many certain scenarios or portfolio models. Is this the best way? Well, it's done manually. Can it be modified? Can it become better? Of course. There's a lot of factors to take into considerations. Just to throw some names like standard deviations analysis or alpha or smart beta or whatever. So right now we don't have a robot that does all of this that is in the use of the people here in the UAE. But does these services are available for, let's say, big institutions like the JP Morgans of the world or the City of the Bear? Of course, but these services requires like $250,000 investments and above. So when you're acquiring such a robot, but is it available here? I didn't see it yet. Would I like to put my hands on it? Definitely yes. That's what I can share for you.
Absolutely. This is exactly why today's platform is really important, because we are showcasing the challenges, and also other people's already have the solutions, so we're showcasing them as well. Let me go back to Mr. Sajeev. When we talk about financial industries, again, not only being banks, but also other entities, how collaborative is the financial industry? Are we going to see more financial entities developing into bigger ecosystems, providing larger, maybe more comprehensive services from the same providers, depending on the feedback you get from your clientele, feedback you get from your partners in the field?
I think it will evolve into a setup where there is both competition and cooperation. So there will be financial institutions competing in certain spaces. There'll be others where they will be cooperating. A great example is a blockchain initiative that Zurich actually co-owns. It's called B3I. And we've got a number of insurance companies actually partnering to create a blockchain setup. This is based out of Switzerland. So we'll see many of these aspects becoming more and more prominent. So as things evolve, it is very likely that you'll see that certain institutions might become the 800-pound gorilla in a certain functionality, and it might not make sense for others to start from scratch and develop it, right? So this is where I do strongly believe that over the next 5 to 10 years, you'll see a lot more of cooperation happening and sharing of components and so on. And especially for legacy organizations, it might become a survival thing because when fintechs with their fancy models and working delivery models really start taking over, the legacy ones will really need to look at, okay, how do I decommission my old clunky systems and look to cooperate with other financial institutions to make my processes more efficient. Sarah, I can't hear you. I'm sorry, you're probably on mute.
Sorry. One of the challenges that Mr. Khayyata has mentioned was, of course, not all people shifted purely into the fintech industry, and that's also a challenge that you and your industry also face. But will the new services provided through fintech change the way people maybe save, and then they will see greater incentives in it, and then maybe make the shift to fintech? Do you see that as a prospect?
If we're talking digital adoption, it's a long journey, right? You're either a digital native or you're not, right? Generally, I mean, it's very hard. It takes time to convert somebody who's not a digital native to become a digital native. Let's also not forget there's a huge group of people in this region who are unbanked. Okay, so when we talk about financial inclusion, we should not forget that huge community of people who are unbanked. And how do you bring them on board? I don't have a magic answer. I don't have a magic bullet. But it is incumbent upon all of us, and I come back to this magic word: awareness, education, inclusion. The community banks is a great way of doing it. Okay, bringing people on board and helping them through that journey, hand holding through them through that journey. It's incumbent upon all of us to do it.
Great. A question going back a little bit to Mr. Salmin. Mr. Hamad, one of the things that also Mr. Sajeev has mentioned is on the collaborative end of the financial industry. So do you see any kind of perspective where people will be able to use an ecosystem that is larger in the prospect of having several providers under one roof instead of having to go to different kind of applications or different providers for different reasons? So if we go a little bit like into our local area, Benefit as the monitor or the regulator, and Benefit application did try to do something like that, where you have everything under one area. So what can you tell us about that initiative?
I mean, that is the complete idea behind open banking, whereby banks offer their products to licensed third-party products. And I mean, Benefit Company has done that very well, whereby you can link any sort of payment instrument, being a bank account, a debit card, a credit card, into the application itself and do transactions and seeing the account balances of those accounts, managing your finances. And I mean, the complete idea behind open banking revolves around that. And open banking is a very hot subject. In Bahrain itself, there has been complete regulations out for open banking, whereby banks are mandated to expose certain APIs, which is needed by those fintechs to plug in and basically do that sort of collaboration. Other countries in the region, like Saudi Arabia, has been also announcing such regulations. It's a very hot subject in Europe and the UK. So I believe we are going now into the area where the data is or the information is not owned by banks but by individuals, and individuals have the right to see their data wherever they want, be it a fintech app or the bank applications.
Perfect. Thank you for that. Mr. Khayyata, coming back to you after hearing your colleagues and counterparts on this specific topic, how are we going to see financial entities developing their applications to be more comprehensive and maybe tackle more areas needed in the community? Of course, it is a geographical thing, depending on where you live and what you do and what is provided to you. But how do you unify it all under one umbrella?
Okay, from experience, collaboration between financial institutions is a tough call. So each institution would want to have the best experience, and that's a blessing on its own, because you can see as a customer who is better than what. As Mohamed Murad mentioned, maybe one platform is a better design than the other one and charges better. So you can see there's the boss, there's the Louis Vuitton, fintechs, and these are the competition. Collaboration could be on the government, on the infrastructure, on the regulatory level. That's where collaboration, I see it, but I still see fintech-based companies will still compete, and that's what we've seen in Europe, we've seen in the USA, and that's on its own is a blessing. That's my point of view.
Definitely.
That I would just, if you'd allow me just to add, it's
Please do.
also about the value proposition. Yani on the value chain proposition of different fintechs, there might be a collaboration level between Mohamed Khayyata's bank and other people banks, depending. But if they don't, if there's no competition, and so in another word, it could be frenemies. Maybe he might like this term.
Absolutely. Before we come to the end of today's panel, this panel right now, a point that we haven't really went in depth to is how digital banks, robo-advisors, and account management applications have really affected the way people think about their finances now, how they divert their savings, whether it is for their children, as Mr. Khayyata mentioned, whether it is for your institutions, SMEs, employees, and different schemes available, such as by Zurich International Life. How are these kind of things like the robo-advisor, digital banks, and account management apps going to change people's lifestyles and change the industry landscape now and in the future? What do you foresee? I'll start with Mr. Sajeev.
Sure. So I think this will continue to increase. Interestingly, I don't know if anybody saw this article on the BBC today. There was an article about how these applications that are actually tracking your expenses allow people to manage inflation. So obviously, many people across the world are going through a difficult time, and inflation is soaring all across. And there was a very interesting article today, for those of you who haven't looked at it. And there's an example of someone who uses multiple applications to track their expenses and make sure that their debts are paid off and so on. So this will definitely increase. I mean, it is very much putting all of your information and your finances at your fingertips. Now, there is a level of integration and bringing together all of it that will happen over a period of time. Wally is a great example of how you can connect all of these things together. But this adoption is only going to increase, that without a doubt.
Definitely. Mr. Khayyata?
Yes, just talking about how would we change, for example, IPOs. Today, when we have done the IPO experience, it's the first time in the UAE whereby you can use our application to issue a national investor number with DFM, Dubai Financial Market, and you can even invest for your kids. So by opening minors accounts, it's also 3 steps to open minors account. You can even, for those of a lower income, the minimum subscription, for example, in DIWA, which is the infrastructure, water, electricity of Dubai, it's 5,000. We said if you have only 3,000 per kid, we'll give you 2,000 from our side, and the minimum is 1,000. So digitization of such services would definitely affect the lower segment to integrate in the economy, and thus you will have a better and more successful IPOs, share price, and even distribution of dividend, tracking the investment growth funds, etc., on an app based would definitely get people to be more included, not only in their financial behavior, but in their future savings. And this is where we can collaborate with the institutions like Mohamed Murad's, and where we can give more sophisticated advice and get people to have a better financial wellness towards their retirement.
Absolutely, Mr. Mohamed Murad. Actually, speaking about institutions such as yours, AHR actually does provide a lot of different incentives, and incentives being the key word here, as Mr. Khayyata says. When you, as wealth managers, provide the best kind of opportunities for your clients, you look into these incentives. For instance, AHR provides an ESG investment opportunity that also will help people make the right choices for their wealth management. So what is your take on how the lifestyle changes after the introduction of robo-advisors, digital banking, and account management apps?
Look, there's a change in the demographics. It starts from the culture to who the client that has access to, like what Mr. Khayyata was saying. A lot of new money is coming. For example, for me, if I wanted to get into the DIWA IPO, I was not aware where to get into it from before. And this is me being very honest with you. Maybe I used to do it through my bank at Emirates MBD or something, and that by itself, to get an IPO without an invitation by the syndicate, you don't get it. So by such a solution, a community solution, being providing those type of offers to the common investor, or let's say to the novice investor, that's a great opportunity to start increasing the awareness. I tell you, for example, when I meet with people being raised here in the Middle East, it's a big range in the gap of the knowledge, and you need to educate them a lot about what's the importance of saving, of investing, of planning for the future, and stuff like that. While I meet someone from Europe or the US, they have already been gifted those shares or stocks or something when they were 13, 14 years old. So the gap in our culture knowledge is huge. And now with these applications coming into the hand of the youngsters and the families, and let's say with a push notification or something, and given the curiosity, hopefully, of the Arab guys, it will start pushing people to know more and ask more and search more, and then finally becoming educated about a topic that is really essential for everyone, every human being around Earth. Because by the end, as we breathe air, we need money to execute every other transactions. Even in the future, we might start paying carbon credits or whatever you want to call it. And this is my entrance to you right now on ESG. Look, in the world of investing, there is something called responsible investments, right? ESG is one of them. Some other people might be thinking about some other type of topics. So it's a preference. Now, do we allocate? And if you go back, step back 2 years ago, if you go into the marketplace and say, if you are an investor and come and say, I want an ESG portfolio, nobody knows how to create a portfolio for you like that. Second, not many, the scoring grades for companies is not unified across the countries or across the, let's say, continents. The best at the moment are the European companies, or this is where the best ESG portfolios you can get them from. And then it becomes up to the guy, to the manager himself and to the investor to go into the underlying assets to really know if these are ESG really, or because some company like an ExxonMobil or something said, okay, now we are paying our carbon credit. They gave them a score and then they became ESG. So there is a lot between what is marketable and what is the real underlying truth, and it becomes, if you're really doing something good to your investor, you need to go through that depth and research and dig out what is the underlying assets, reflect it, share it with the investor, and then it's up to him to decide whether that's the right type of him or not. And this requires a collaboration between both the investor knowledge and the wealth manager to share that type of awareness. Thank you.
Absolutely. Thank you for that. Absolutely right. I mean, and that is part of fintech, having that knowledge available at your fingertips, even as a corporation, as AHR. Mr. Al Salmin, from your point of view, a benefit, of course, the company has evolved tremendously over the years, not just with the application, but originally even with like setting the standards of what is needed for the lifestyle of people here in Bahrain, international monetary kind of applications and so on. So from your point of view, how is the introduction of digital banks, robo-advisors and account management apps affecting our region in Bahrain from benefits point of view?
I mean, it is not just from benefit point of view. It is a vision from the top management of the kingdom, getting lower to the financial sector by central bank and up to the benefit company. Financial inclusion is a very hot subject. I mean, and the benefit company has been tremendously trying to help in that sector. Programs such as wages protection system, although Bahrain is a bit late on that, and in addition to and evolving the infrastructure of payments, have shown like the tremendous innovation has helped a lot in terms of financial inclusion. In terms of the payments platform, we've seen double digits or even 3 digits growth after the pandemic, all because of the need and the desire of people into the speed of transaction. That is a very crucial element. But on top of what my colleague said, I think that the education and awareness is a very crucial element. At least in our region or in Bahrain specifically, I know that saving and investment, they rely very heavily on the public pension funds. And they do not think about ways and plans into savings and future plans or emergency funds or even investments that can grow above the money. And I think that requires not just digital solutions and fintech solutions, but also awareness that can start from lower age, like schools and universities, up to public awareness collaborations between the media, the central bank, the Ministry of Industry and Commerce, and everyone, private and public, should participate in such awareness, because in the end, this will enrich and benefit the society and the consumers.
Right, thank you for that. As you have said, there is a very big movement in educating from school age in the topics of saving and financial management, because in reality, a lot of people from the generations that you've seen now that are in their workplaces don't have that knowledge, and they're trying to catch up. I thank all of you for being with us today. Our session is at its end. It's titled Digitizing Finance and Financial Inclusion. I thank you, Mr. Mohamed Wassim Khayyata, CEO at Maryah Community Bank. Thank you very much for being with us, Mr. Sajeev Nair, Senior Executive Officer for Zurich International Life. Thank you, Mr. Mohamed Murad, the Financial Planning Specialist at AHR Private Wealth, for talking to us about your point of view on these issues. And last but definitely not least, thank you, Mr. Hamad Salmin, Assistant Manager, Business Development and Services at The Benefit Company. Thank you for being with us today.
Thanks to you. It was a great pleasure to meet all of you.
Thank you.